Good morning, everyone, and a warm welcome to everyone for joining us today for our Voluntary Retirement Incentive Plan educational webinar. My name is Terry Sir, and I am the Chief Total Rewards Officer in Human Resources. Today, I have the privilege of having two of my HR Benefits Unit colleagues joining in the presentation, Jackie Swaro and Brittany Phillips. Jackie, would you go ahead and introduce yourself, please?
Yes, thank you, Terry. My name is Jackie Swaro. I'm a benefits administrator and also the team lead in our benefits unit. And I am primarily responsible for the benefits administration, and I can certainly answer any of your questions related to retirement as well. So I will turn it over to Brittany.
Thanks, Jackie, and good morning, everyone. I am joining remotely, so I don't have a camera today, but happy to be here, at least vocally. My name is Brittany Phillips, and I'm the Benefits Communication and Compliance Administrator. And so here to also answer any questions you may have, and definitely probably will hear from either Jackie, myself, or Terry if you send in questions via email to the retirement message email.
Thank you, Jackie and Brittany. All right, to kick us off this morning, I just want to do a little update again on background information of what is bringing us together today with our second offering of the Voluntary Retirement Incentive Plan. As many of you know, with the budgetary outlook at the university, we have been asked by our administrators under President McConnell's leadership to offer this second offering of the Voluntary Retirement Incentive Plan. Again, this is a very exciting opportunity to be able to provide a financial incentive to those of you that are retirement eligible employees who have many well-earned years of service in support of all of your work at the university. Now, before we begin the formal presentation today, there are just a few housekeeping items that I'd like to share with all of you. As you heard at the beginning, we are recording today's session for use on our website for those that were not able to join in today. We also ask that you do not share personal information when asking questions, but we ask that you do email us at hr_retirement@colostate.edu for personalized service to be provided to you. And we'll drop that into the chat so that you'll be able to see that email address as well. Lastly, if we could ask for you to please utilize the Q&A section so that we can have a facilitated dialogue at the end of our presentation. We're going to be going through, first of all, the eligibility rules for what it means to be a retiree from Colorado State University. We're then going to go through all of the many plan requirements for the Voluntary Retirement Incentive Plan. We've also added to this presentation quite a few slides that Brittany will go over with us that are FAQs that we've gotten not only from the first VRIP incentive, but also from all of the emails we've been receiving since we've announced the second offering. And with that, I'm ready to begin today's presentation again with my colleagues, Jackie and Brittany, and Jackie is going to kick us off with retirement eligibility. Thank you.
Right. Thank you so much, Terry. All right. So we will kind of set the stage for our conversation today. And we'll talk a little bit about the university's definition of retirement and what is considered retirement eligible service. So this definition of retirement is applicable for the VRIP program, but it is also used to determine our retirement eligibility throughout the year, or when anyone is looking at retirement across the university. So who is considered a retiree? The general rule is that a faculty, admin pro, or state classified employee who participates in the defined contribution plan or in Colorado Para must be at least age 55 with 20 years of service or age 60 with at least 5 years of service. There is one caveat to that service age and service requirement, which we'll see as we move into the next few slides. And we'll determine a little bit more in defined service and what the full criteria is for retirement eligibility. So the one caveat that I referred to is in terms of retirement eligibility based on para eligibility. So this exception is that if you are a para participant and you were appointed or reappointed on or before June 30th of 2005, you are eligible for a full or reduced retirement under para provisions and also have 5 or more years of consecutive benefits eligible service at CSU prior to your date of separation. You are also considered to meet the CSU definition of retirement. So this is the one circumstance where an individual is not necessarily required to meet the CSU age and service criteria as we defined on the previous slide. So what does this really look like? This could be a faculty member who is maybe 52 years old and has 30 years of benefits eligible service, who does not meet the CSU definition of age 55 with 20 years of service. But let's assume they were in a benefits eligible position prior to June 30th of 2005 and have 5 years of consecutive CSU service prior to retirement, and they're eligible for full retirement under para. They are ultimately eligible to retire through CSU. This could also be a situation where they are age 58, but maybe have 17 years of service and now meet the age criteria, but not yet the service through CSU. So when they meet the above criteria, they are eligible for para retirement. Therefore, they're also eligible for CSU retirement. So if you do find that you meet this criteria, we'll ask you to provide documentation from para confirming you're eligible for retirement on a specified retirement date. And this allows us to verify your para eligibility, as we don't have access to see if a person has maybe purchased service credit through para or has obtained other service from another para affiliated employer. So this situation is not too common, but it certainly could allow eligibility for those individuals who contribute to para and were appointed in their benefits eligible position prior to June 30th of 2005. So that is a little bit of an exception as we go through talking about service now. So I discussed the general rule for eligibility. So what is considered service in relation to the CSU definition of retirement? So this simply means that if you received or were eligible to receive the university's contribution to the DCP or para, had an appointment of at least half-time or greater, and if you had an appointment of half-time or greater and received or were eligible to receive the CSU contribution toward benefits, such as our medical insurance, those are service periods. So consider these as positions that are benefits eligible. You will see on the bottom of this slide that it indicates that CSU service does not need to be continuous to count toward overall service. However, it does require that there must be at least 5 years of benefits eligible service immediately preceding the date for retirement to be eligible. So for example, that could be a person who is age 55, maybe had 10 years of service, had a break in service for a few years where maybe they were employed elsewhere, then returned to CSU and have been in a benefits eligible position for the last 10 years. They would meet the definition of retirement because they have reached the age and service requirement and have 5 continuous years of benefits eligible service prior to their retirement date. A similar example would be that instead of a separation, an employee's appointment was moved to less than 20 hours per week for a period of time, then moved back above half-time, back into a benefits eligible position for at least 5 consecutive years, then they would also likely meet the criteria. So now that we have kind of looked at what is considered service, I want to address briefly what is not considered benefits eligible service. So those positions are such as student or non-student hourly, graduate teaching assignments, or faculty admin pro or postdoc positions that were less than 50% or 20 hours per week. those types of positions do not count as benefits eligible service. One other point about positions in service is that if an employee who was in a 50% or greater faculty or admin pro temporary assignment or a postdoctoral fellow assignment prior to January 1st of 2014, those individuals did not become benefits eligible until after serving one continuous year in a half-time or greater position. So the first year for those employees is not considered service for retirement purposes. So hopefully that explains service in terms of what we review for our program and for retirement eligibility in general. Our HR teams do have an integral part in this process as the members of our records unit build your entire CSU history of past assignments, and the benefits team reviews that information to ensure that we can quantify and qualify your service for retirement and applicable post-retirement benefits. So with that, I will turn it back over to Terry, who will discuss the highlights of the VRIP.
Wonderful. Thank you, Jackie, for that summary. And for all of you again that have joined us today, I know that looking at the retirement eligibility can seem very daunting. It is very complex with a lot of nuances, but please have no worries. We are able to synthesize, and we have a data summary already prepared that has preliminary eligibility. And again, just use the email that Brittany has dropped into the chat of the hr_retirement@colostate.edu. And we'll be happy to look at your individual data and to provide those answers to you. All right, moving forward and looking at highlights of this second offering of the VRIP. Again, the background is to offer an incentive to eligible employees if they would choose to voluntarily initiate retirement. Again, the main premise for this program is to help with the university financials looking into this next fiscal year and to minimize any impact on existing staff with layoffs, furloughs, salary reductions, etc. If we jump down to the bottom under plan details, this is a very important thing to remember as you're all contemplating if you wish to apply for program participation. We will be utilizing a web-based secure application that is on our retirement website. And I think Brittany also dropped the link to that webpage in the chat. Now that application will be turned on June 1st. The application period under the plan rules is June 1st to June 30th. Now, if you apply early in the month of June, and then you decide near the end of June that maybe this wasn't the right decision for you, and you've changed your mind and you wish to withdraw your application, just please send an email to us in Human Resources, and we'll be sure to go ahead and remove your application from review by your department. The voluntary retirement date options remain the same as they were within the first plan. There is one thing that I just want to reinforce because we've been getting a lot of questions already since announcing the second offering about negotiating dates of retirement with your actual department or college. And we need to make sure that everybody understands during the second offering that the dates that are eligible for retirement under the plan rules will be August 31st or December 31st of this year. Another thing to keep top of mind is we have people that are retiring consistently throughout the year. So some people have reached out to us as well that have already announced and or submitted paperwork to initiate retirement. And those individuals would not be eligible to apply for this program. Another very important caveat, probably the one that was most asked about during the first VRIP offering, is what happens, can I come back to work? And if I can come back to work, in what capacity can I come back to work? And so one of the advantages of this program is providing that base salary incentive to employees so that it may encourage retirement that otherwise might not have been contemplated yet. But in turn for that base salary incentive, there is a 2-year time frame where you are not eligible to return to work at the university. And that includes any entity that we are responsible for processing payroll and or benefits. And so another entity that would extend to is our CSU system office. If you would advance the slide, please. Perfect. A lot of people are curious again about, well, how does this whole application process work? Who's going to be responsible for approving or possibly denying my application? So I just want to reinforce with everyone today that it is truly a committee approach. This approach, again, begins with the employee applying for the program. It then comes to us in HR benefits. We then, as Jackie mentioned earlier, work with our HR records team, who is solidifying your years of service so that we can make sure that you are truly eligible to retire from the university before we begin to send data to your department. The individuals within your department, admin unit and or college that will be reviewing and providing feedback on if an application can be approved would be your department head and your dean or VP. Now, for those academic areas, the final decision with all of that feedback that is garnered from the college or admin unit level then goes to the provost's office. For the admin units, I should say, they go to the CFO and then ultimately up to our president, Joyce McConnell. So again, just want to reinforce by this little pictograph again, how that process actually will work. A lot of questions coming in wondering, well, who's going to review my application? And will it be reviewed, in the same way that everybody else's applications are being reviewed? The answer to that question is emphatically yes. The same process will be used for every application. Now, the ability to approve an application will be based upon the budgetary resources that are available again within the college or the admin unit. So that's something to keep top of mind. There has to be budgetary savings for an application to be approved. Just want to reinforce again, this is absolutely a voluntary decision on your behalf to decide if you want to apply for this program. No university employee can persuade you to retire. So again, please, any questions that you have about this process as you make decisions on applying, do reach out to us in Human Resources and we're happy to help you. Again, no guarantee this program will be offered again. I can share with you from the first VRIP offering, we had around 178 people that applied, and ultimately we had close to 160 people that exercised the option and did voluntarily accept retirement and the base salary incentive to leave the university as a retiree. So just a little background information again for you on the first program and how it was received by those of you or the people that were eligible at the time to retire, to build a little confidence again in the program and how it's continuing this time. All right, if you could advance the slide, please. Thank you. Okay, if we look at the incentives specifically, this is faculty, admin pro, and non-classified staff. So the incentive that's built into the program remains unchanged from the first offering. It is 1 week of the employee's annual base salary for each year of retirement eligible service, not to exceed 30 weeks total. Now, on the right, you see a chart called the DCP Retiree Medical Premium Refund. What that means is we have a current program referred to as the DCP Premium Refund that provides employees with a dollar amount to help offset their medical coverage in retirement based upon their retirement eligible years of service with the university. Under this program, the DCP refund has been enhanced. It is for DCP eligible participants under the age of 65, so not yet Medicare eligible. It will be based upon the years of retirement eligibility service. The subsidy will be equal to $599 a month, which is the current green medical plan price in our faculty and administrative professional benefit plan. The other important plan rule is this benefit would be available for the lesser of up to age 65 or 5 years if you're a younger retiree meeting our eligibility. So if we jump over to the right on the chart, let me just give an example to you. If you have, let's use age 60 with 5 years of service, which, as Jackie mentioned, is one of the criteria for eligibility. If you were a normal retiree, retiring from the university, not under this VRIP incentive, your DCP premium refund amount that you would be eligible for would be $50 a month. Under this enhanced monthly DCP premium refund, we are actually adding on an additional amount to make that $150 a month instead of $50. So you can see that there is quite an enhancement to try to bridge the gap for being able to purchase medical insurance. Now, while we're talking about medical insurance, I can also add that for retirees leaving the university, there is always the option to enroll in COBRA, which is basically a federal law that regulates the extension of medical coverage. And that's an extension of the actual benefit program that you were eligible for as an active employee. So again, we can talk more about that later as well. Now I'm going to turn it back to Jackie, and she's going to give a couple examples about how this base salary is calculated, base salary incentive, I should say, is calculated. And again, we're starting off with the faculty and admin pro, and we'll be rolling into state classified next.
Great, thank you, Terry. All right, so this slide, as Terry mentioned, will help us demonstrate how the base salary incentive is calculated. So on the left side, you'll see example number 1 is for a 9-month faculty member who is 100% FTE, so they're full-time. They are 57 years old and have 32 years of retirement eligible service. Their annual salary is $75,000. And as the plan document indicates, that salary is as of the most recent academic year, which is May 16th. So to do the calculation, we simply divide the 75,000 by 39 weeks, which is the divisor for a 9-month assignment. And that helps us determine what the weekly equivalent is. Then we multiply that weekly amount by the number of eligible years of service. So in this particular circumstance, this person has 2 years beyond the maximum 30 years that's allowable. So the weekly equivalent is multiplied by the maximum number of years for this individual, which is 30. So also, please remember that the incentives are subject to tax withholdings. So all taxation that you would see applied through your normal payroll will apply here as well. The only difference is that it's not your W-4 tax withholding that actually drives this taxation on your incentive. It's subject to IRS regulations, a lump sum incentive through a voluntary retirement plan is taxable at a flat rate, which is 22%, I believe. So now if we look at example number 2 on the right side, this person is a 12-month admin pro whose assignment is 50%. And they are 66 years old with 8.5 years of retirement eligible service. So their annual salary is $120,000, and as the plan indicates, is as of June 30th for 12-month employees. So in this scenario, the lump sum incentive is prorated by their FTE. So the first piece of the calculation would be to prorate the salary by 50%, which is a total of $60,000. Then for a 12-month employee, the annual salary is divided by 52 weeks to obtain that weekly equivalent. In this example, we multiply the weekly equivalent by 8 years. So you may be asking why this person has 8.5 years of service and why the calculation is based on 8 years. So the plan document does indicate that the incentive is based upon completing an entire year of service. So for a 9-month employee, that would be an entire academic year. And for a 12-month employee, that is an entire calendar year. So for this person, since the 9th year was not achieved, the incentive is based on 8 as the last full year that was completed. So hopefully that helps clarify on how these base incentives are calculated. And I will turn it back over to Terry to talk about the state classified.
Wonderful. Thank you, Jackie. And for all of you that I see chatting in about tax withholding, we do have a special FAQ that Brittany will go over that outlines that specifically for you too. All righty, moving back to state classified staff. And what does the incentive mean? Well, we are able to maximize up to what the state of Colorado personnel board rules allow for a state classified employee when a separation agreement is entered into, to use the 18-week total criteria. So we were really excited that we were able to work with the state and to make sure that we were on proper legal footing with what was the maximum we would be able to provide. So how that is broken down is, again, 1 week of the employee's annual base salary for each year of retirement eligible service, not to exceed 18 weeks total. Now, one thing that's very different for state classified employees is the retirement benefit is through Colorado Para. Colorado Para is a defined benefit plan. And what that means is there is a promise to you as a retiree through Para to receive a benefit, a lifelong benefit, in retirement equal to whatever your age and service is when you retire. And Para has many different tables based upon the date that you became a Colorado Para member that actually drive what percentage of your highest average salary would be the computation they would use to derive your monthly retirement benefit. So one thing I would say to all of you that are Para members currently is if you are looking at applying for this program, especially with an August retirement date, because that will be coming up very quickly, is you should very well reach out to Colorado Para now and ask them to provide to you a benefit summary statement of what your income would look like in retirement. It does take them a little bit of time to turn those back around. So again, the sooner the better. Colorado Para is definitely up to date and ready to go. They know we are offering the second incentive again, and their staff is ready and waiting to service you. Now, jumping down to the bottom under the Paracare bullet, another very important thing that comes along with this defined benefit plan is lifelong medical coverage. Colorado Para does offer pre and post age 65, so Medicare eligible benefits. And again, to the right, you have lots of resources that are available to you directly from Colorado Para. Their premiums for 2021 for their medical plan, their dental plan, and the other perks that they offer will be listed. So it would also be a great time for you to start looking at those and looking at what your premium would be. Now, a very important thing to also remember as a Colorado Para member is there is a Para subsidy that Para actually provides to you directly for being part of their organization that will help reduce the cost of your medical coverage. You will find all of that information in the Colorado Paracare medical booklets that are online as well. And again, to the extent that we're able to, we're happy to help you navigate those questions. But again, your best resource for Colorado Para questions is directly with Colorado Para. There are things that they will not share with us just to protect the confidentiality of your retirement account. All right, now back to Jackie, and she's going to step through the calculation.
All right, so the calculation for the state classified employees is the same calculation, but we'll walk through some of those examples. So for example, number 1, this is for a 12-month state classified employee who is 57 years old and has 100% FTE and 32 years of retirement eligible service. So their annual salary is $50,000 as of June 30th. So for this lump sum calculation, we'll again take the $50,000 salary and divide it by 52 weeks to get the weekly variable, which then we multiply by the maximum number of weeks on the plan, which is 18. So again, even though this person has 32 years of service, the maximum the plan provides is for 18 weeks within that calculation. So if we look at example number 2, this person is a part-time 12-month state classified employee who is 66 years old and has a 75% FTE, and they have 8.75 years of retirement eligible service. Their annual salary is $80,000 as of June 30th. So since this person has a less than full-time FTE, we will calculate that prorated salary by 75% for a total of $60,000. Then the salary for the 12-month employees is again divided by 52 weeks to obtain that weekly equivalent and multiplied by 8 years. So this situation is similar to the previous slide where this individual did not reach the 9th year, and the incentive is calculated on that last full year, which is 8 years. So very similar to the faculty and admin pro examples that we saw previously. So I will turn it back over to Terry.
Wonderful. Thank you, Jackie. And again, just a reminder again for all of you that joined us today, the calculations, we have a preliminary data subset that we can help you with what we see your base salary incentive to be, should you wish to apply. If you don't want to try to go through and figure out that calculation, we're happy to provide that level of service to you. Okay, let's move into some other important considerations for the incentive program. We have a lot of questions coming in again about how is this base salary incentive paid to me? Well, it's based upon the date that you choose to apply for retirement. So if you would retire under the August 31st retirement date, the lump sum base salary incentive would be paid in September, and it would be taxable then in the 2021 calendar year. Now, for tax purposes, if any of you are thinking, well, boy, I'd like to defer that base salary incentive to 2022 instead, since my retirement income may look a bit different than my active salary when I was employed, a good option for you might be the December 31st retirement date, because the base salary incentive would be paid and taxed in January of 2022. The other thing to think about with the incentive is it is not considered includable salary for the para or the defined contribution plan purposes. So there are no contributions made to a retirement plan from that base salary incentive amount. Another thing that has been enhanced for the faculty and admin professional and non-classified individuals is the way the annual leave payout will be handled under this program. So many of you are probably familiar that by manual procedure currently, any leave that's taken 30 days prior to your date of retirement would reduce your maximum up to 24 annual leave day payout. Well, that is not the case with this program because these retirement dates would be coming up very quickly. It would be difficult to leave training principles behind with the staff that might be taking over your position, responsibilities on a temporary basis for you to take that much time off in advance of those retirement dates. So just do be reassured that if you do have a maximum right now of close to that 24-day mark, you will be paid out up to your maximum or no more than the maximum of 24 days without having that 30-day reduction apply. So again, good news in that aspect as well. No worries, state classified staff who are joining us, leave payouts still follow the personnel board rules for state of Colorado. So no change in the way your leave would occur. Another thing a lot of people ask us is with the large payout of leave, that can be quite a bit of additional funds that would be subject to taxation. And so what we often see people do is choose to defer that into either our university 403B plan or Colorado Paras 401k, or we also have that extra opportunity where there's an additional maximum that can be provided on an annual basis into the 457 plan. And for individuals that are age 50 or greater, the maximums for these plans are $26,000 a year. So by way of example, if you had already put in quite a bit of money throughout the year in, let's say, the university's 403(b) plan, you could then put in some of your leave payouts to max that one at $26,000. You could also then take the rest of your leave payouts and contribute it to Colorado's 457 plan. Again, that 457 plan has a separate maximum. It's not an aggregated limit with the 403(b). So hopefully that's helpful as well. Okay, leave payout. We have been getting a lot of emails from people contemplating applying for the program about how do I calculate my leave payout. So we've added that on the bottom of this slide. It looks like it's cutting off our little star. I apologize, on the very bottom. That basically reminds there is a maximum on the number of payable days that can be paid out. And sick leave for faculty and AP, do remember you're eligible for 1/4 of your sick leave balance up to a maximum of 15 days. So again, lots of great information on how those leave payouts would also affect either deferring money to a retirement plan to try to tax shelter it on a pre-tax basis, or to take that money as cash, of course, taxable cash, in your paycheck with those payouts instead. All right, we are ready for the next slide. And I will be turning it over to Brittany now. Brittany is going to step us through not only some of the educational things that are going on, but all of the many FAQs that I know you're all waiting very patiently for. So again, Brittany, take it away.
Great. Thanks, Terry and Jackie, for sharing all that information. We definitely recognize that this is a big decision, and we want to help answer your questions and make sure you're making the right choice for you and your family. However, there are just a few of us in benefits, and there are many of you eligible for retirement. So we hope that with this webinar, we were able to kind of cast a wide net and answer some of your initial questions. But again, if you have specific questions, please don't hesitate to email that HR retirement address that I included in the chat. We'd be happy to help answer those questions. We are hosting 2 more sessions similar to this one, so there's no need to join again unless, of course, you have more questions or just want to spend some more time listening to HR. But if you have friends or colleagues who are considering the program and have questions, there are 2 additional sessions that they can join. And one of the 3 sessions will also be recorded and posted to the VRIP website, which was included in the chat. In addition to the sessions hosted by HR, our partners at Social Security and Colorado Para will be hosting informational sessions as well. The links to register for those are also on the VRIP website. So if you're interested in joining those, you can register. It's hosted through Zoom as well. The Social Security session is going to talk about how to apply for retirement benefits, but more importantly, how employment at CSU may impact those benefits. Hopefully you all have some general knowledge or have heard of the government pension offset and windfall elimination provision, which could both have an impact on what you are eligible for through Social Security because CSU is a non-Social Security employer. We in HR don't have access to make those calculations or advise on your specific scenario. So if you have questions, I would recommend joining that webinar. Josh will provide a lot of resources for helping you determine what you're eligible for. Or you can also call your local Social Security office or visit their website and create a profile. That should all help you calculate what you may be eligible for in the future. Colorado Para is also going to present on their retirement process, which is some additional steps from the CSU process. They have their own kind of steps you must take to initiate payments from Para. So if you're in Para, state classified and faculty or admin pro, if you're in Para, you'll want to join that session to make sure you know the timing and the paperwork that's required for that process. If you're unable to attend, you can visit the Para website to register for another session, which I believe they host on a weekly basis. I think the next slide might be, yep, perfect. So now we'll move on to some frequently asked questions, and these were compiled between inquiries we got last year during the initial VRIP rollout, and then also some that we've gotten this year as we roll out the second offering. So the first is, the plan says that if I'm rehired in any capacity within 2 years of retirement, I must repay the incentive. Is it not permissible to return as a non-student hourly or an independent contractor? And that is correct. It is not permissible. In any capacity includes all employment types at CSU. So if you're on CSU payroll at all, you would have to repay that incentive if you returned within 2 years. And I do believe there was a question in the chat about state classified and working for another state agency. And Terry, correct me if I'm wrong, but I do believe that is permissible. And we would not require you to repay the incentive if you were at another state agency.
Correct, Brittany. Because this program is offered by Colorado State University, the return of employment within that 2-year time frame, again, is limited to those entities that are on our payroll system and are offered our benefit programs. Thanks for clarifying, Brittany.
Yep, thank you. And thank you for that additional question. We can include that in the next sessions as well. And then I did see also in the chat some questions about the incentive and how it's taxed. Of course, it's taxed. And so that lump sum payout is taxed at a flat rate, and it's taxed the month following your retirement, so when it's paid out. And those percentages are included here on the slide. It's 22% for federal income tax, 4.65% for Colorado state income tax, and 1.5% for Medicare, unless you're grandfathered and don't pay Medicare tax. Okay, and the next question is, if I've already announced my retirement, are there any exceptions to applying for the incentive? And the answer to that is no. The incentive is designed to help those who have not yet made the decision to retire more comfortably. And there are no exceptions to that. However, I did see another question in the chat about if they applied for the incentive last year, and Terry, I'm not sure if we know the answer to this, but turn it over to you. If they applied for the incentive last year but didn't end up retiring, are they eligible to apply again?
Great question. Thank you. I had a hard time finding my mute button. So that is another very common question that we're getting through our HR retirement email. If you are eligible for retirement, whether it was the first offering or this second offering, you may absolutely apply for the program. What we cannot guarantee is if your application was approved previously, if it will be approved again. And I would also say the same for if an application was denied, would it be denied again? I think that that really will be a conversation based upon the current budgetary resources of the area in which you're working on what applications they will be able to approve this go around. So again, if you are interested and you meet the eligibility, please do apply.
Thank you so much. And then the next question is, when will I know if I'm approved? And so throughout the process, HR will be in contact with you via email. However, there are a lot of factors that kind of impact how long it takes. As you saw at the beginning, it goes through many levels of approval. And so a lot of knowing when you're approved is dependent upon how quickly those applications are moved through the process. So if it gets held up with one individual for a few days, it's going to certainly delay you knowing when you're approved. But as soon as we know, we will contact you via email, confirming the base salary incentive and separation agreement for your signature. Yep, sorry. And then the next slide, thank you. So this is one we definitely got a lot. Again, we know it's a big decision. There's a lot of things to consider. So even if I apply after the fact, can I change my mind? And yes, you can. There are a few different time periods in which you can make that decision. So if you apply in June, you can revoke your application anytime prior to June 30th, 2021. After the application period closes, you also have 45 days before your retirement date to consider the separation agreement. So you can choose to not sign that, and that would in essence be you changing your mind and revoking that. Or if you do sign it and return that to us, you have 7 calendar days from that day that the form is returned to revoke your separation agreement. You can send those that request to the My HR email or that HR retirement email. So as an example, If you apply and choose an August 31st retirement date, you have 45 days to consider and submit your separation agreement. If you sign and return the agreement by the due date, you have seven calendar days to revoke your agreement in writing. Otherwise, your August 31st retirement date will be finalized. So again, there's about 3 different time periods in which you can make that decision. And then the other big one, am I eligible to retire? So we pulled some preliminary data based upon the information in the HR system and determined who may be eligible for retirement by the end of 2021. And we emailed those individuals directly, and those folks were also invited to attend this webinar. So based upon that data, we've determined that you likely are eligible for retirement. But your personal questions regarding base salary and then confirming those years of service should be emailed to that email address. If you apply and it's determined you're not eligible for retirement, we will exclude your application from the department college consideration. So it will not go through that approval process. It'll just stop at HR. And that's it. So now we can go through some of these additional questions that we have. I do see some questions again asking about age and years of service to confirm those. If you could just email those questions to us directly, we can pull your record and confirm. And then there's a question that says, I'll try to group them together in the same category. So still talking about years of service. What about somebody serving as a rotator to a federal agency during the last 5 years?
Brittany, could you repeat the question?
Sure. I think it's asking about years of service to a federal agency, and I'm not sure if that means another agency outside of CSU, because if that's the case, then those years would not count.
Correct.
We can always see if we can get some more clarification on that one, but.
Okay, thank you.
Yeah. Okay, and then so there is a clarifying question. To be sure, there is no wiggle room on the retirement dates.
That's a wonderful question. Again, the reasoning for me reinforcing the August and December date. Many of you have reached out to us with just a couple people during the first round that actually were slid into different retirement dates. The only way that that can happen under the plan rules is if the president would deem it necessary for university business needs to choose a different date. Our administration had quite a bit of conversation about that aspect and how the difficulty with conversations with department heads. We talked to deans, some VPs, and also our college business officers about the recapturing of the base salary incentive and how that needs to all work from a budgetary perspective. So for this go around, the dates of August and December are going to be considered very firm to make sure there is enough time for the colleges and the admin units to recoup that cost to have the savings to allow approval of an application. So again, there's a lot of budgetary things going on behind the scenes. Certainly, I'm not the best expert in that. Our business officers and our Office of Budgets are. But again, that's what I can share with you to try to help answer that question.
Great, thank you, Terry. And then so we can move on now to, I think, some DCP refund questions. So the first is if the medical refund is subject to income tax.
Another great question. That is the reason why it is called a DCP quote refund. Because we characterize it as a refund, what actually happens is during the retirement counseling process, we would have you fill out direct deposit banking details with us. We then have our third-party administrator make those deposits directly to your bank account on a monthly basis. So the answer is no, because of the way the program is currently set up, it does not become subject to taxation.
Perfect. And then still along the lines of DCP, what health insurance benefits, if any, do we get when we are 65?
So for a faculty and administrative professional or non-classified staff member, the way the university currently offers program benefits is by way of that DCP Premium Refund. So if you retire from the university and you have already attained the age of 65, you would then be considered Medicare eligible and would need to look in the open market for Medicare plans that are available to you. The incentive that we're providing to you in the form of a monetary incentive is to help you be able to fund the purchase of where you choose to get that insurance in retirement.
And then I see quite a few questions actually asking for the slides. And I mentioned we will record one of the sessions and post them online, but I'm not sure, Terry, if we intend to provide the slide deck as a document on the website somewhere or email it only to the folks who attended.
I certainly don't have an issue with putting it online. That may help for a couple of the slides where it looks like our parenthetical star was cut off with the footnote as well. So I do apologize for that on the margin restriction. So yes, let Jackie, Brittany, and I work after the end of this session. We'll review this recording, and if everything is good and the volume and clarity is okay, we would even be willing to post this one to our website more quickly.
Perfect. And then moving on to how the application is routed. There's a question about if the department head will be made aware of their application.
So another really good question, because we've changed the process, if you will, on how the application will go through. During the first round of the VRIP, it was administered out of our Vice President of University Operations Office through what is called a dynamic form, for those of you that are familiar. What we found, though, is there were a lot of restrictions in having the data readily available to pass back and forth. So we've modified that. And again, now the application will be coming through our HR web form. We then will be working with compiling all of the data as soon as the application period ends on June 30th, and our records team has a bit of time to solidify the retirement eligible service of everyone. We will then provide full spreadsheets to each college and admin unit. Now, the business officers will also be copied on those spreadsheets to make sure that they are fully aware of what's happening. But we are also asking for those key contacts within the colleges and admin units to cascade that information down. Now, another thing that I would recommend for you do, based upon your comfortability, is if you are going to apply for this program, it certainly would not hurt to just provide a courtesy FYI to your leader, and to let your leader know that, you know, you're really thinking about maybe applying or have applied, and just want them to know. I think that's also very helpful just from a relationship perspective, for them to start forward thinking, well, if the application is approved, what would we need to do to keep the business operations running? So hopefully that's helpful.
Thank you. And Jackie, I think it might be helpful if we can really quickly go back to that application process slide for these next couple questions. And Terry, there's a question, what's the criteria for approval at each level? And then kind of a follow-up to that, is there any recourse if a department head denies someone's application?
Great questions. Again, there's a lot of questioning, I think, surrounding, can a singular individual deny my application? Well, honestly, the answer to that is no. And again, please remember, when I spoke to this slide, it is a committee approach. So again, HR has to first say that you're even eligible to apply, right? Once we see your application has come through. But then your department head needs to weigh in, along with your dean and or VP, up to the provost again for the academic areas, or the CFO for the admin areas, and ultimately up to President McConnell for the ultimate final decision. Now, what will happen is in the workbooks that are provided to each college and admin unit, they have to justify within certain marked fields. They will be providing to us things like, how long can the position stay vacant? Is it even possible to leave the position vacant? Can I rehire someone into this position, maybe at a less senior salary? There's a lot of things that go into the cost savings. And so there has to be an approval based upon, yes, we can commit to doing whatever that may be, right? A, B, or C, or all of the above. And it will generate cost savings. Therefore, we can afford to pay for the base salary incentive for this application to be approved. And so again, a committee approach, but it is based upon the numbers. It's based upon, can they make this work to allow that person to retire? And do they have enough budgetary resources to do so?
All right, let's see. There's a question that says, please address whether those who are approved for December 31st retirement will be held to the requirement that any annual or sick leave is deducted from payout. And I think Terry covered that one. So if you have additional questions, let us know. But the annual and sick leave is not deducted from the payout. The payouts are the same as if you were to retire even without the incentive program. And then questions about taxation. The 22% tax rate, is that fixed for the year, or is the lump sum, can the lump sum be treated at filing time as regular income, given that the retirement tax rate might be lower than 22%?
So that's another really good observation. We're not able to answer tax questions, so I do want to make sure that I'm clear before responding. But let's talk about the base salary incentive. So say your base salary incentive is $10,000 that you would be eligible for. What will happen via our payroll department is a 22% federal taxation amount will be withheld from the 10,000, 4.65% Colorado taxation, and then 1.45% Medicare tax, unless you happen to be a grandfathered Medicare exempt individual, which we still do have some that predate, I think like 1985 dates of hire that are not actually paying Medicare tax. So again, what'll happen is when you file your tax return for whatever calendar year it is, what will ultimately be derived on your either I owe the IRS money or they owe me money is going to be a compilation of exactly what this question was asking, is what is your ultimate tax rate? But we are required to withhold that 22% federal taxation upfront.
All right, and I know we are at time. So there's quite a few questions left in here, but I think we touched on most of them. And I don't see any that look to be pertinent, I guess, to this conversation and something that we can't answer via email. So definitely, if we didn't get to your question, there's lots in here, so feel free to email us. We can definitely address those. And then we'll get these slides posted to the website, hopefully before the end of the week. So if you have more questions, you can refer back to that. And then I'll turn it back over to Terry if she has any other closing comments.
Thank you, Brittany, and thank you also, Jackie, and a huge thanks to the Human Resources Benefits team for so quickly putting this second offering together, and then also an advance thanks to our records team who will be going through all of the years of service. But I would say more importantly, thank you to all of you who joined in today. We had a very large participation, and I know this is, again, such an important decision where there's a lot of personal questions that need to be asked. So please do reach out to us. As Brittany indicated, we are happy to help you and to provide that level of specificity to you for your circumstance. Just reach out to us at our HR_retirement@colostate.edu email. And again, thank you. We wish you the best of days.